Hello, YouTube. This is Trevor here. This is my first time ever streaming. This is going to be a YouTube channel where I discuss cryptocurrencies and the news going on with them. Um, Before you ask, my personal preference is I like Bitcoin, I like Ethereum, and I like Hex. Those are the only three cryptos that I touch. Those are the only three that I mess with. There are lots of other ones out there, but those are the three that I like. If you like other ones, that's great. Good for you. There are other ones that I used to like, and then I got burned, and then I stopped liking them. So I'd like to go over the news each day in the cryptocurrency world and try to frame it in such a way where you I'm bullish on the market, but it's very dangerous to get involved with all the DeFi craze, all the hype, there's a lot of garbage. And I've filtered through the garbage so you don't have to. So you can either take my word for it or you can just say, you know what, I'm going to venture into this coin that you think you might think you understand it, but chances are there's either going to be an exploit that's found. Um, Usually they come in the form of these flash loans where you can basically, usually a programmer will figure out a way that they can get a loan to execute without, basically, if the transaction creates profit, it'll execute. That's really the simplest way of saying it. I've never done a flash loan. I've just heard that that's a pretty common way these things are exploited. Um, you also have to worry about an admin keys. You also have to worry about promises of future work. Um, Pretty much all these coins aren't finished. Bitcoin, Ethereum, and Hex, they're basically finished products. Now, sure, there is development going on Ethereum, and there's an issue with fees right now, but it's secure. You don't have to worry about bugs. They have a bug bounty program. These things just work. These things are just good. Um, so I just want to just look at some news stories, give you guys my take. The first one that pops up, Anon powered options. DeFi platform Premiere goes live. Never heard of that. Anon. So options, it could be something. It's something that if it runs on DeFi, that'd be pretty neat. That would be useful. But the thing is that with futures and options, there are these issues where is are they settled in cash or are they settled with the actual collateral, with the actual token? So right now, Bitcoin futures, big problem with that. If it's cash settled, the Bitcoin futures, when it's not going to shoot up the price. For example, if the price goes up a bunch and a short seller misses the mark, you want it to where it's settled in Bitcoin, then they have to purchase more Bitcoin to close off their position. Kind of like what we've all seen with the GameStop stock. So Melvin Capital, those guys, yeah, they had to buy more GameStop stock. So you have that with a cryptocurrency, that'd be pretty cool. So the Anon-powered development team has announced today the launch of Premia, the latest decentralized finance DeFi options platform live on Ethereum. In an interview with Cointelegraph, the group of semi-anonymous developers, I don't understand that. You're either anonymous or you're not anonymous. What does semi-anonymous mean? It's like, oh, we know them, but we don't know them. It's like we know their first names. Do they know some details about them, but not all of them? What? I've never heard of semi-anonymous. That throws me off there. Behind Anon Powered, who collectively requested they be referred to as members of the Premier Republic. Okay, you guys are full of yourselves. You're the Premier Republic is like, yeah, sounds like you guys think you're kind of a big deal with that one. Um, anyway, the name of for Premier's forthcoming DAO set, and anyone who knows what DAO is, decentralized autonomous organization, which DAOs, my opinion, they're garbage because they're ran basically by voting, and people are bag holders, they vote. Why would a bag holder? I own some coins, so I know what's best for the coin. I'm not a programmer. If I hold a bunch of coins, like a large stake, I don't know what's best. If I own a large stake, you should want to incentivize me to just hold my position. You know, if I have a huge bag of Bitcoin, that doesn't mean I know what's best for the Bitcoin network. Does that mean I know whether they should go private or go into proof of stake, or they should maybe, if you're a big bag holder, you should have say in marketing if there's like a treasury. But as far as the tech side goes, DAOs are useless. You know, you don't want bag holders making technical decisions. They don't have the background. Um, so a DAO, something like Dash, for example, they have a treasury where they do have people decide, okay, how do we allocate this money for marketing? That can work, but as far as fully decentralized running all the technical decisions that have to be made, you need to have the founder make the decisions, and really something should just run off the protocol, finished protocol, which that's where Ethereum, Bitcoin, and Hex come in. They just run, they just work. The protocol is set and everything works in according to the protocol that's already set. You don't need to make these executive decisions. Anyway, they said that out of the gate, users will be able to write, sell, and exercise American-styled covered calls and puts, which can be exercised prior to the option expiration date. Okay. Premia's launch adds to an increasingly crowded DeFi options marketplace. Yeah, very crowded, full of garbage. Joining projects such as Octus, Hedgic, and Open. Never heard of any of those. However, members of the Premier Republic believe that their project will be able to stand out due to blend of features, including an architecture which leverages ERC 1155s. Oh, this already sounds garbage. ERC 20. Okay, it's time tested, it's proven. I mean, I'm not a programmer. I've made my own ERC 20 just for fun, just to see how it worked. I did a 30-minute tutorial, copy and pasted a bunch of code. So, and then compiled the code and then paid like a $50 gas fee to make my own coin. So I've had some exposure to it. I don't know Solidity. I don't know programming. I know some stuff about computer hardware and I've used this stuff. But anyway, ERC20 works. Why are you making these running these other standards? I mean, you can justify it with Chainlink where it has features that ERC20 doesn't support. Like ERC20 doesn't do everything, but if you want security, just stick with that standard. I don't even know what ERC 1155 what why would you need to use that standard for? Maybe it's getting off topic, but if I Google it, it just says simple summary, a standard interface for contracts that manage multiple token types. Okay, a single deployed contract may include any combination of fungible tokens, non-fungible tokens, or other configurations. Example, semi-fungible tokens. Okay, so like semi-anonymous. You can be kind of fungible, or you can be like not fungible. Okay, this standard outlines a smart contract interface that can represent any number of fungible and non-fungible token types. I said that already. Existing standards such as ERC20 require deployment of separate contracts per token type. The ERC 721, I believe that's Chainlink, I could be wrong. Standards token ID is a single non-fungible index, and the group of these non-fungibles is deployed as a single contract with settings for the entire collection. So in short words, it seems like you can have a bunch of tokens within a token within a standard. In contrast, it's a multi-token standard allows for each token ID to represent a new configurable token type, which may have its own metadata, supply, and other attributes. Sounds like to me you're just putting in a bunch of features you don't really need, and you're compromising security. I don't trust it. Maybe it works. So it says motivation. So ERC20 requires a separate contract to be deployed for each token type. Okay, so this just bundles in the multiple types, it looks like. Places a lot of redundant bytecode on the Ethereum blockchain and limits certain functionality by the nature of separating each token contract into its own permissioned address. With the rise of blockchain games and platforms like Engine Coin, game developers may be creating thousands of token types, and a new type of token standard is needed to support them. So this sounds like something that really isn't suited for Ethereum. It sounds like something that's just going to clog up the network even further. Almost sounds kind of like CryptoKitties. Like, let's just make a bunch of gaming tokens and just have them all fit into this standard so that they're just easy to spit out. However, ERC 1155 is not specific to games, and many other applications can benefit from this flexibility. So that's where you get into the options part, and non-powered options. Okay. So new functionality is possible with this design, such as transferring multiple token types at once, saving on transaction costs. Well, that's nice, saving costs, because Ethereum right now can be crazy expensive. You can spend like $70 right now to trade on Uniswap when the congestion is really high during the week. So trading escrow atomic swaps of multiple tokens can be built on top of this standard, and it removes the need to approve individual token contracts separately. My guess is it's at the cost of security. I don't know, but kind of sounds like there's a trade-off there. It's also easy to describe and mix multiple fungible or non-fungible token types in a single contract. My guess is this token standard will get exploited. There will be an exploit, is my guess. Maybe I'm just, sounding like an old fart, some like guy who thinks, oh, only ERC20 can work. Because it's just hard to trust. You add these different standards and these different features, and I just question, okay, will this really work? It must implement all the functions in ERC 1155 interface, blah, blah, blah. Got some code right here. I don't know what's going on. All right, so back to the story. So their project will be able to stand out because they got features. They got a primary bootstrap configuration phase. Okay, well, what's a primary bootstrap contribution phase? Sounds like there's expectation of future work that is going to make this amazing. It's very vague, like, oh, we got a bootstrap contribution phase. Sounds like just fancy corporate speak for we're going to dump some new fancy feature tech onto you that will just blow your mind. Okay, so send those expectations in place. I see. Oh, a VC raise. Gotta impress those VCs. And a developmental philosophy they believe reflects the wider DeFi ecosystem, one that is open to all, regardless of credentials or even a verifiable public face. We already have Uniswap. It's open to everyone. Now you open up options platform to everybody. Okay. I'm all for that. I'm not against that. Just make sure it doesn't have an exploit. Sounds like my guess someone will do a flash loan and you're gonna see an article 2 months, 3 months from now. It'll be saying the Anon powered network was just hacked and the Ethereum blockchain got exploited. And it's like, no, that's not what happened. Just someone did a flash loan and they stole people's money. And it'll be like $7 million worth of DAI stolen from Anon. I can see it already. You just see this over and over again because there's always backdoors to these things. They can always be exploited. I think something that's been core to our ethos while doing all this is trying to have a group that's a bunch of honest, anonymous people who want to change the view of anonym, anonymity, anonymity. I can't say that word. In the landscape and let the code speak for itself, the member said. All right, let the code speak for itself. I mean, I'm all for that. Hey, how about get some audits? Audits are good. Ethereum has audits. Hex has 3 audits. Got to add that in there. The members of the Premier Republic, one of whom claims to currently work at a TradFi broker-dealer, which Cointelegraph could not confirm, said that they largely met through crypto-focused chat rooms on Discord and Telegram. The first project they produced under the Anon-powered umbrella, Don't Buy Rope, was one of the earliest NFT yield farming experiments. Oh boy, yield farming. Yeah. You guys remember sushi, yam, pickle, yearn, these variable interest rates. It's just, they end up collapsing. And the interest rates don't last. Yield farming, just, I don't understand why even bothering with that. People are chasing yield when Hex is the perfect option for that. You have a smart contract, you get paid the inflation, you lock up your tokens, you wait. Why are you yield farming? Why is this a thing? I don't understand. As a result of their work on Don't Buy Rope, the team is proficient working with ERC 1155s. Well, that's good that they're proficient in that. Often used for minting NFTs, which NFTs, yeah, those are a whole nother story. Those are useless, man. And guess what? When the bear market hits, your NFTs, they're not going to be worth anything. I mean, you'll see these values, right? These humongous values for certain NFTs. The that people post, like maybe it's from a famous artist, maybe it's, oh, this picture whatever on the blockchain, it's rare, and it's like, let's say from Rick and Morty creator Dan Harmon or something, and like, oh, it's going for $100,000, but what if nobody buys it, right? And it's just posted for 100 grand. You think it's worth a lot, but if nobody's buying it, it's similar to eBay. Somebody could post something for 100 grand and nobody's buying it. Coca-Cola could sell a can of Coke for $100, but nobody buys it. So all of a sudden you think that it's valuable. But if nobody's buying it, it's the value that they post for these NFTs, you don't know if there's a healthy market for them or not. And especially when the bear market comes, nobody's going to buy those things. They're just going to be holding bags of useless pictures on the blockchain. So the ERC 1155 standard allows for a single contract. So this is what we read earlier, to mint multiple fungible or non-fungible tokens. The standard is what enables Premia's more flexible strike times, a feature that many of Premia's competitors don't currently offer. Some of the solutions that you're seeing are done in ERC 721 way, said one Republic member, and that is, in a traditional financial sense, is considered an OTC, over-the-counter trade. Each ERC 721 is going to be specific to the strike price. By using an ERC 1155, we can keep this listed derivative mentality, which is fungible, and create the secondary market where you can buy and sell them after the fact. Likewise, their native token also comes with some unique twists. At launch, there'll be an interaction mining program similar to liquidity mining, where users who write buy and sell options will receive uPremia tokens proportionally to the fees that are paid to the protocol. uPremia is non-transferable, but can be staked to earn protocol fees, which will be distributed to stakers as a transferable, tradable PREM token. This architecture won the team a glowing review from Solidity Finance. The auditing firm, okay, that's good. They're being audited, reviewed the Premia contracts. Premia was one of the best projects we've reviewed in the sense of security and logical construction of code. But here's the thing. if it's not a finished product like Hex is, they will add code. And then that code will need to be audited again because new code likely, very likely introduces new bugs and new things that need patched up. So unless that code is finished and done, that audit really is only so useful as far as making sure that there aren't any exploits in this thing. So they get this glowing review. I don't see why an auditing firm would give a contract a glowing review. That doesn't make sense to me. It's either like we found these threats, high, medium, low. We assign a number to each, and then that's it. It's not like, and then they have an overall summary in an audit and say, okay, we found nothing major here. The code is well written and has no major exploits, and the stuff we did find, they fixed. That's really essentially how an audit should read. It shouldn't be like, wow, this is glowing. That, I don't know about that. Sounds fishy to me. Premia was one of the best projects we've reviewed in the sense of security and logical construction of code. The development team on the project is extremely impressive. Oh, it's so cringy. That does not sound professional for an auditing firm to say extremely impressive. Okay, sure. Said a facility finance rep. Sounds like they were paid a little bit extra under the table. I don't know. Maybe, maybe not. This is crypto. The Wild West. Who knows with these things? Perhaps more interesting than the technical details of the platform is the vision. The vision behind it. Such vision. Members of the Premier Republic said that there was internal debate about whether or not to bootstrap the launch of the protocol with a venture capital raise, especially given the perhaps profligate sums some projects have been fetching as of late. Ultimately, they decide to go a different route. The ethos behind DeFi, in our eyes, is open to the people, said one member, and giving favorable terms to deep pocketed investors doesn't fit that vision. Which, okay. So you don't take DeFi money. I'm not DeFi money. What am I saying? You don't take VC money. Okay. That's good. I feel like somebody's on a hope soapbox here. Somebody's on a high horse. The ethos behind DeFi in our eyes is open to the people, said one member, and giving favorable terms to deep pocket investors doesn't fit that vision. I mean, when I look at my three favorite coins, I mean, Hex, that had an adoption amplifier. The Hex was auctioned off. That's a fair way to distribute coins. Bitcoin had a very fair distribution where you mined it at the beginning, you mined it for cheap, and over time the mining got more and more difficult as people competed for it. And you got free Bitcoin just by double clicking an exe in the beginning. I was not smart enough to be in on that in the beginning of Bitcoin. Wish I was. With Ethereum, so you had there definitely were VCs in on Ethereum. Ethereum's pretty good at how it works. Um, having VC money in doesn't make it evil, but it does give them an opportunity to dump on people's heads in the future when the price goes up. So I can see how um, it would be better if you don't need VC money. I just don't see it as you being as this being some more moral like good. I think that they're being a bit uh, just making a bigger deal out of it than it should be. Like if the code is good and the thing works, why does it matter if VCs get in or not? It's like if you need the money, sure, take the money, make the thing work, make the code good. Ultimately the product matters more than whether VCs got in at the beginning or not. That's what matters more. So the code is solid. Um, but for all the idealism, there's still practicalities. After the launch, yeah, there are expenses. After the launch of their initial product, the team has capital needs for developer hiring. Sounds like this is a project that's going to be active. There's going to be continue work done. So that one audit that they got, yeah, that covers the work that they did in the past, but they're continuing to do development. For me, that's a concern. Maybe it's not possible to have an options DeFi platform without continued development. But continued development implies that there's going to be expectations of future work, and um, they'll continue selling off their token to pay those development costs. So that's going to hurt the price. Um, and ultimately, they can introduce new bugs. And there could be admin keys. So that could be a problem too. As a result, there will be a primary bootstrap contribution that will be open to all. And again, that word bootstrap. Let's see how that goes. So they have a bunch of checkboxes. They deploy the contract, the tokens are allocated, and they've got a website. Oh boy, you got a website. Why is that even in there? That should be a given. The website published. It just feels like they just threw that in there just to make it look good. It's just so cringy because there's so much marketing behind this. You can feel the push that they're really trying to look good. During the 1 week PBC, users will be able to send ETH to a contract and receive Premia tokens on a bonding curve. Because of DeFi's open and permissionless nature, both VC whales and individual investors will be able to participate. So there will be VCs, but they don't have an advantage over individual investors. Okay, that's good. I don't know what they mean by a bonding curve. I don't know if it's similar to an adoption amplifier. So daily in an adoption amplifier, you have a pool of tokens and you put in your Ethereum. And then at the end of the day, you get out a portion of the overall Ethereum put in with how many tokens you get. So it's fair because, hey, you're competing against other people. So it's like, let's say there's 100 tokens. You put in 1 Ethereum. Everyone else puts in 4 Ethereum, let's say, just to keep the math simple. So you put in 20% of the Ethereum, you get 20% of the tokens. So you would get 20 tokens because you would get a fifth. You put in a fifth of ETH, you get a fifth of the tokens. Everyone gets in the same time. Hey, that's fair. I'm all for that. I don't know what bonding curve means. You're saying ETH to a contract and receive Premia tokens. Sounds like that's the type of thing they're doing. I'm all for that method. The team in some ways faces a steeper adoption curve because of these positions. After DeFi summer in 2020, rife with hacks, rug pulls, and scams, we talked about earlier, the community is perhaps rightfully suspicious of projects that don't have real-world reputations behind them. Yeah, suspicious. It's a bit of an understatement. It's more like I expect this thing to fail, and if this thing succeeds, I'll be surprised. I mean, I'd be happy to see it succeed, but I'd be surprised. It's a notion the Premia team rejects. There's been this stain that's been put on anonymous teams by competing teams that have faces, but plenty of the ones have been run by people with faces, like few, many, things like that, have been pretty blatant scams, and the community still accepts all the people that have faces. So here's the thing about face is it's an appeal to credibility. Ultimately, if you have finished code on the blockchain, ideally running as an ERC20 standard. I am not a fan of ERC1155. Maybe it'll work, but it's not time tested. End of story. Like I said, if something is finished and it's audited, you don't have to worry about it. Like Hex, the security is fine. You don't have rug pulls, you don't have issues. Now, what people complain about is an origin address. There's an entity that holds a large percentage of the tokens. You see that all the time in the real world. It's nothing new. You have a large holding interest, and that large holding interest will not dump their stake, their share of what they hold, because it doesn't benefit that entity. It really doesn't, because there really isn't enough liquidity. There's not enough sellers to support that massive amount. So if the entity just never sells, eventually people just trust it. Nobody questions Satoshi's 1 million Bitcoins because Satoshi hasn't sold. It's been 10 years. At this point, we know, okay, Satoshi's not going to sell. Vitalik with his Ethereum holdings. Nobody's stressed about Vitalik holding as much Ethereum as he holds. He's a good actor. Satoshi, good actor. Hex's origin address, good actor. You're going to see that. People do act in their best interests, and sometimes you have to look at that. An entity will dump if that's the intention. You'll see it early on. You'll see that happen right away. The entity just wants to take advantage of the network and be a leech. If you truly build something that works, you don't have to kill the golden goose. You don't have to just nuke the entire price structure, the whole price chart, by selling off the supply. So I welcome a large holder. You see that in Chainlink. Nobody complains about 81 addresses holding 90% of the coins. I'm not going to complain. I mean, if I was a Chainlink holder, bag holder, as long as they hold their coins, it's just price support. Holders support the price. They don't help move it up, but they help give that support level to where when there are a bunch of sellers that flood the market, it stops at a certain point. It doesn't just keep going down in price. You don't have these massive 85 to 95% drops when you have holders that just will not sell. But back to this story, lots of scams. People are starting to see that having anonymity or pseudo-anonymity is a benefit. We want to take this organization to the next level and continue to build out and provide services and an opportunity to people who want to protect their privacy but still want to contribute to the Ethereum ecosystem and the Ethereum community. So when they talk about opportunity who want to protect their privacy, it sounds like it has to do with people who they hire as developers. Sounds kind of like marketing to developers who just don't want to be publicly known. Sounds like their appeal to that. But anyway, that's my take on this cryptocurrency story. Being a fan of Bitcoin, Ethereum, and Hex, those are my 3 coins. I'll talk about other coins. I'll talk about other stories, but can't get past those 3. Those 3 are solid. They're not going to get you in trouble. Sure, you have dips in crypto, but you want to avoid getting burned. And I've been burned, and I'm done with getting burned. So I want to give you guys some good entertainment, some good insight, and I hope you enjoy the show. Thanks for listening. Bye.